damn phones. Babylons can't crack the code.
All right, back at it again. So this is where I ended the day at. I'll come back to this. Basically, what I want to go ahead and jump into was risk management, as I keep trying to engrave in, y'all's heads as y'all continue to watch this. Is it's about risk management, and it's not about just knowing what a good risk to reward ratio is. It's about knowing how to mitigate, monitor, not over leverage, diversify, and really just ultimately manage your risk. And risk management is not just a basis of knowing, getting in a trade, good risk to reward ratio, and if the trade's worth getting in. It goes beyond that. And I think that you'll see a lot of traders don't talk about this enough. The ones that teach classes or even vlog, like I'm doing, is they don't talk enough about risk management and what exactly you can do to help mitigate risk and exploit opportunities as they come along to their full potential. And when you get into a trade and it doesn't go the way you thought it would, that you've managed to manage your risk to the point that you take a loss, but it's not nearly as big as you'll see like a lot of people in the trade that do. And basically what I mean by that is, I'm not gonna put anybody out on Front Street, but once again, someone posted tonight on this trading group on Facebook, and basically it just says, I don't know what to do, and it shows a picture of their trade, and they bought quite a few shares of this stock, and their average is above 200, above 210, I'll put it that much, is their average cost, and they had bought double-digit shares. We're talking over 15, over 20 shares, and so I'll just keep it anonymous to that point. But the whole point behind is they, where it shows diversified portfolio diversified, it's showing 100%. So this person dumped 100% of their account into this one trade, and as sad as it is, it's not unheard of. It's pretty common, and it's one of the most common mistakes among new traders. Is even if you're going to be doing long-term investing, you don't want to dump 100% into one thing. And especially, I don't know, now it didn't show if this person has accumulated over time or if they did it all in one. Now I hope that if they did do it 100% of their account, that they accumulated over time, and basically because what happens is and that's the thing you'll see like a lot with day trading is, and a lot of the people that do day trade that do pretty good at it, they're not dumping 100% of their account in. That's one way they're eliminating the risk is by position size as well. Basically, when you dump in, however, say regardless of whatever size your account is, you decide your full position size is going to be 500 shares, right? And you buy in at a certain price point. We'll go ahead and pull it up on TD Thinkorswim. And so basically, we're going to break it down real quick. So you buy in, you're seeing that it's hitting the support level, and so you decide you're going to day trade this, and it's looking like it can't break through this. So you buy 500 shares all at once. So what you're saying is at this price, say you get filled at 172.92, you're saying that it's not going to go below this price. That you are 100% positive that the probability is more than likely in your favor, it's not going to go below this price. And what happens? It goes below the price. And now you've taken your full position. And so what do? Do you have, can you think fast enough? And that's a lot of people don't understand when they get into day trading, is that when you day trade, you have to be able to make decisions without even really thinking, like second nature, that because there's no time to decide, oh, what should I do? Should I go ahead and sell, or do I think it's gonna come back up? I don't know what to do. And no, you got to know on the dime what you're gonna do. And I think that's where a lot of people struggle with day trading, is that they're not able to perceive and interpret that information fast enough to come up with a decision. Their brain is not equipped to process that information fast enough, and that's okay. A lot of people aren't that quick, and so basically you have to find a different strategy that works for you. You know, regardless of how well you can tell if a pattern works out or not, if you can't process the information fast enough to make a decision, you're a very indecisive person. You know, even without even trading stocks, just indecisive a majority of the time about what you want to eat, where you want to eat, and whatnot, just minute things. Then I don't know how you expect that you're going to make it as a day trader if you can't even be decisive enough on the small things, that in important things throughout your day, yet alone something that you got a good portion of your hard-earned money invested in, that you need to make a decision on the split. What are you going to do? You're going to sell, you're going to add on the position, or what are you going to do? And so there's no time to really think. It just has to be second nature when it comes to day trading. So basically you going all in 500 shares at 172.92 and it goes down, you got to be able to get out quick, and we'll break it down in 1 minute. I believe we were looking at this area because I was pointing out it hit support areas right here, and it finally kept doing it. And so you finally got, said you're gonna get in, you got in over here, or even if you got in over here and it starts going up. And so do you start scaling out, or do you hold your full position thinking that it's going to come back up and either test this area or this area, or and then come find out it doesn't, it rejects the 20-day EMA and starts selling off? Are you going to get out? Are you going to start scaling out? These are things that you need to develop prior to trading with big sums of money. That's another thing I tell people that are new, is to start off small, because these mistakes, if you're only holding one share or two shares, then you lost $1, $2, whatever, not a big deal. But when you're sitting here buying 10 shares, 20 shares, and you have a small account, this little thing can really damage your account. This one little mistake or this error, or you get in and you accidentally type in the wrong type of order, and you end up buying shares instead of selling shares on accident somehow. And I've seen it happen. It happens a lot with people that have taken short positions, and they don't realize that they have to click buy. Instead they click sell, and they end up adding on to their position as it continues to go against them. So say they shorted over here and they're thinking it's going to break through this area, and it starts going reverse, and so they trying to hurry and get out, and they accidentally hit sell, not realizing that they're adding on to their position. And so now they're way down once it gets up here. And so these are the things that I see a lot of mistakes that happen. So basically, back to the point that this person took 100% of their portfolio, all the money in their account, invested it into this one stock, and it has taken a major crap on them, and it's showing no signs of turning around. Now I am in this at $1.92 is my average cost. I have 3 shares. I'm down a little over $60. When it broke $172, that's when I really started debating on going ahead and getting out of this, because for one, it keeps breaking through support, and it's not showing any respect whatsoever for any type of support areas that it's had previously in time. And it really, on the 4-hour chart, you really can't find that many of them, just because of how the stock's done that. All the support areas were way up in here, and it's just broken through them all and continuing to go down. Now we got the G20 summit coming up, so it could turn around come Friday or next week, but by then, how far could you be down? or would have found support by then. Now I'm still really debating on getting out of it, and not because I'm down a little over 60 bucks. I'll tell you that that's partially why, but that's not what my whole decision is based off of. And as far as getting out, you can see I'm down $63.21 in this trade. All right. Now I added 10 shares to ACB today. It was after I made that video posted earlier this morning, and I added 10 shares at $5.75. And I'm just going to show you that. Bam. So you see it, right? Now you look how far I'm down in this trade. I'm down 13, almost 14%, 46 bucks. But this trade is not the same trade as Apple, not even close. For one, it's not even a tech stock, it's a marijuana stock. Now I'm holding another stock too, marijuana stock, CGC, and I think I'm down even more in that one. Yeah, I'm down over 100 bucks in it. I'm down almost 20%. But the deal is these stocks are long-term holds, long-term trades, long-term investments, and I'm only holding a small portion of my portfolio in these stocks. I got a little over 11% in this one. Currently in ACB, I got a little over, close to 7%. I'm not holding 100%. So the fact, now you think if I was 100% into CGC and I'm down almost 20%, how much that would be in my account? You know, like that would be a big drawdown. But because I'm holding such small share size, and these are long-term investments, these aren't short-term trades, that's why I'm not even considering getting out of them yet. You know, overall market's doing all right. It's starting to look, it's indecisive, but it's showing a little more favor to the bullish side, if that makes sense. And this is just my opinion. So you can see that I'm up for the day, about 2%, around 50 bucks. I was up a lot more right before we end up closing. At one point I think I was up over 100, yeah, early in the morning. But you know, it's not a big deal because I'm not selling, I'm still accumulating. I have a little over 300 left in buying power, and I'm looking at adding another 100, maybe two, probably just another 100 sometime during the week, and then on Friday I'll add another 200. And basically I'm back at work, doing 7 days this week. I'll probably end the week around with 64, 65 hours, somewhere around there. Working on Sunday, I get paid double time. Instead of time and a half, it's double time. So that helps out a lot. And this is part of what it takes to grow a small account. It's not just a matter of just trading your way up to grow it, but as well working extra hours, picking up side work, whatever, to be able to add as much as you can each week so you can compound and get to grow that much faster. You know, basically if you're growing a plant, you're going to use regular soil or Miracle Grow. You know, you can water it, but you can also add other additives to make it grow faster. And basically that's what I'm doing by working extra hours and whatnot. Is I'm just you know, as corny as it sounds, I'm giving it Miracle Grow and trying to get it to grow faster than what it is. So we can see for the past week I'm up $181.78. You may say that's not a whole lot of money, and it really isn't, right? But keep in mind that it's a small account. That's almost 8%, not bad for a week. And then on top of that, as you know, the account gets bigger, 8% will be a lot more in dollar value. You know, this is 8%, you know, close to 8% based on $2,512.72. Now, if you think about double that and how much 8% would be, you know, so, you know, that'd be what, like $360 something for 8%, and you know, and it goes on and goes on and goes on. We can go behind and do all the math on the time it would take if growing at this rate, et cetera, et cetera. But really right now, what I'm trying to get y'all to continue to focus on is managing risk. I'm not trying to tell you what trades to get in, what to buy, what to sell. I'll just show you where I'm at, what I'm doing. You know, I'd be more than happy to hear your ideas, your thoughts, your trade ideas, what trades you're getting in, what you're looking at, why you're looking at it. You know, feel free to leave a comment in the comments section below, if you got the time to do so. But aside from that, you know, it's just a matter of managing risk, and people don't realize that your success, a big majority of it, I believe, of your success in trading is going to be dependent upon your ability to manage risk. The more successful you are at managing risk, then the more likely you are to be a profitable trader. You focus on managing risk more than you focus on making profits and just getting into good trades, getting decent entries, and having a plan as far as your exit, whether it goes in your favor or goes against you. What are you going to do? Now with Apple, like I'm saying, just because what the chart's showing me, and you know, I'm down $60, that's not a big deal, but I don't want much of a bigger drawdown than that for this stock that's not showing any signs of, you know, I started to give it some benefit of the doubt earlier today when we saw, go ahead and pull it up on a smaller time frame, and I'm going to start wrapping this up. So earlier today, you know, we hit this low 170.26, and I've been debating on getting rid of it if it broke through 172, and it obviously did. I figured I'd give it a little bit more time, let it marinate, see what happens, and it turned around. Now, as it turned around, and how we closed out, I thought, man, that's going to be great. You know, maybe it's finally people are starting to realize it's undervalued. And as much as I believe it's undervalued, it's not just about what I believe, and I have to keep that in mind. It's about what the majority of people believe, the smart traders, the smart investors. And so when the bad news came out about Trump looking at imposing 10% tariffs on their products coming into the US from China, then you just see, you can tell exactly when the news hit. It doesn't get any more obvious than that sometime around, what is this? So what would that be? 15, so right shortly after market close, around 3:10, apparently the word got out, his statement, and you can see, bam, how quick fundamental news can change the price of the stock, and how much it can dramatically, you know. And you know, this is another part, and I'm not getting far into it. We're coming up on the 20-minute mark for this video, but another thing that will help you with trading, especially being a new trader, and determining your position size, as well as determining how much you want to risk, how much leeway you're going to need to be able to give it before you determine that you were wrong about this trade. This trade right here is starting to tell me that I was wrong, and it's starting to let me know pretty good. And I'm not down a whole lot. I mean, it's $60, but do I cut it now, or do I let it become $100 loss? And you think it's going to be any easier to cut it when it becomes $100 loss than it is right now? You know, you got to think about it that way too. That if I wait until I'm down $100 on this trade, then I'll be looking back saying, damn, I know I should have cut it when it was at $60. When I was down $60, I knew I should have. But, you know, I was being hard-headed. So I'm going to see how it performs tomorrow. The probability is likely that I will go ahead and cut it. It's just really, you know, if we can get back above 172, then I'll give it some more time. Right now we're at the 170. That can't be right. Give me 1 second. Okay, well that's showing what it closed out at. We're at 170.93. It's showing it closed out up here at 174.62, which we did at the end of the market. But the price we're really at right now is at 170.93 is what the price was in after hours when it completely cut off at 8 p.m., which that's Central Standard Time, 8 p.m. here. That is when it finally cut off. So with that said, we will see how the market opens tomorrow, and as we get closer to Friday, I expect volatility in the market to become on the uprise. I'd assume that people are going to be making quite a bit of money off the TVIX, which is based off of volatility, and we'll just go from there. You see here how bad it's oversold on the 4-hour, 180 day on the RSI, and we can see here on the volatility standard deviation how high it is, and it's, you know, it's just not showing any signs of any type of support or, you know, any stability in holding around a certain price range right now. You know, so you're gonna have to make a decisions. But ultimately, this whole video is about managing risk. That I don't want to see when it, you know, the people watching this, I don't want you to be one of those people that are posting up, what do I do? And then showing a picture of you have your account invested in something. And I gotta give it to this person, at least they invested in a decent stock. It was just horrible timing, you know, you couldn't have picked the worst time, but at least they did invest in a decent stock. Just, they shouldn't have went so big, you know. If they go big or go home, and, you know, you blow up your account, you will be going home. At least for a little while. And so ultimately, if you're new, you start off small. Your winners are small. You're not going to get rich quick because you're taking small positions. So you're taking small gains or small losses, but it allows you to get more screen time. And screen time is a big part of staying in the game and being able to become profitable. You know, the only way you're gonna get real experience is by being able to stay in the game longer and stay behind the screen, behind the computer, and watch the market day in and day out with whatever time you have when you're not at work. And if you're taking big positions, then it's gonna cloud your judgment as well. It's gonna, you know, you blow up your account, you know, you're gonna be blowing through money left and right, and then, you know, you might make it, you know, 2 weeks or a month, and then, you know, you gotta chill for a bit and kind of build up your stake, you know, so that you can get back in and start trading. And so basically what I'm just trying to say is, if you're new starting off, I would start small, and you may have some decent winners starting off from time to time, but without a strategy, keep this in mind, that even a blindfolded monkey throwing darts drunk off a tequila can hit a bullseye from time to time. So yes, it's possible to get lucky, but just because you have one good trade, 2 good trades, it doesn't mean you become a successful trader. If you have 1 good week, 2 good weeks, it isn't really until you get to 6 months to a year, when you look back at your track record and see, am I in the green or am I in the red, will you really know exactly how good of a trader you are. It just takes time to see the full picture. So you can't just base, you know, being green one day as, you know, that's it, or being green 1 week, you know, as that's it. It's good to get, you know, to get excited and to know you're doing good, but I still strive to continue to learn. I was thinking tonight before I did this video that I need to set aside some time myself to be able to study instead of posting so many videos. And so now I need to work in my schedule. When am I going to find the time to continue my studies as far as on the market? I do what I can prior to the video and after the videos I make, and as well as in the morning and throughout the day. But you know, I'd like, you know, at least, you know, a few evenings out of the week that I can sit here and read and actually like study different other concepts of trading. And I still watch other traders and their vlogs and see like what they're doing, what's working for them, what's not working for them. And I'm a firm believer that watch as many different people as you can to see what's out there. You know, especially your first year, you're gonna be learning so much new stuff that you weren't even aware. And then before you know it, the people around you are going to talk about, you're talking a foreign language when they ask you about trading and this and that, about hedging and diversifying, and cutting losses and limit orders and stop losses and stop limits and trailing stops, and all these different things, and just leveraging, not getting over leveraged, mitigating your risk, staying out when you need to, limiting your exposure, and margin calls, and just there's so many different things to learn, and so many different indicators as well. Learn about earnings and earnings reports, and just because the stock beats earnings doesn't mean it's going to go up in value. A lot of times the conference call has a big part with whether it's going to gain value or not. So anyhow, with that said, I'm gonna go ahead and wrap it up. This video is almost 30 minutes now, and I wanted to keep it short. I hope that wasn't too fast for you, and you did get some good information out of it. And I look forward to continuing to post up, and I will see y'all in the morning. It's almost 3 a.m. here, so I gotta get some sleep. So have a good night. Talk to y'all later. See ya.